Welcome back to my channel. Today we are going to talk about what you need to be looking at whenever you're buying a bond. Should we just be looking at the taxes, as in should we just be rushing for the IFBs because they're tax-free? Should you be looking at the interest rates, or what is it exactly should you be looking at whenever you're making a decision to invest in any of the government bonds? My name is Berlin. Kindly press the subscribe button. Now, of course, goes without saying, like I've already said, interest rates is one of the things that you need to be looking at. At what rate is this paper being floated at? And is that rate a rate that you'd like to maintain for the entire duration of the paper? If the bond, for instance, is being auctioned at 10%, does 10% sound like a reasonable rate that you'd like to maintain for the entire 10 years or 15 years or 7 years, depending on the duration of this paper that you're investing in? At what rate is the paper being, or what is the current market rates? All right. Now, tied to the rate is the tax. Is this paper tax-free? Is it an IFB? If it's a treasury bond, at what rate will you be paying the government taxes? What tax will be applied on your coupons? Remember, there are certain treasury bonds which are taxed at 10%. That is the long-term papers, the ones that goes beyond 10 years and above. And then the other papers, the other treasury bonds, which are shorter, 10 years and below to 2 years there, are taxed at 15%. So this paper that you want to invest in, the paper that you want to buy, what tax is applicable on it? Remember, tax-free does not always mean, the IFB does not always mean you're getting the best bargains. I'll repeat back. Buying an IFB does not always mean that you have the best bargain. Why? Because the net interest or net coupon rate on the IFB, which is the same as the gross rate because it's not taxed, yeah, can sometimes be lower than the interest rate on the treasury bond if you apply taxes. I will give you an example. In March of this year, CBK floated or reopened 3 treasury bonds. These same papers were also auctioned 2 months ago in June. Okay? The terms of this paper were FXD1 2024/03, which had a coupon rate of 18.3854%, and it was taxed at 15%, meaning if you invested 100,000 shillings on that paper, you'll be earning per annum, you'll be earning 18,384. And then you apply 15% tax on the 18,385 to get a net return of 15,627. So that gives us a return on investment of 15.627%. Now, this paper was auctioned in June this year. 2 years later, CBK reopens 2 IFBs. There's the one that is auctioned at 17%, the 6.5, and the other IFB is being auctioned at 14 point something percent. Okay? So in our minds, or in your mind, you might think that because these IFBs are tax-free, are not being taxed, this paper of 17.8% and this other one of 14% are better than the treasury bonds which are taxed. But we can see in this explanation or in these two examples that I'm giving you, that you are better off having bought FXD1 2024/03, which will give you a return on investment of 15.6% after tax, which by all means is better than this IFB at 14%, even though it's not being taxed. So at what rate are you buying this paper, and what is the tax applicable on the paper? What is your net return on investment? All right. Now, when you're buying a paper, when you're investing in the bonds, or when you want to bid for any paper, you need to know the settlement date. What is the settlement date? The settlement date is the dates between when the auction is happening, the deadline for the auction, and when you must have made the payment. It is the deadline for remitting payments to CBK. It's the deadline for doing your RTGS. If the settlement date is on 14th August, do not go to the bank on 14th August at 3 p.m. trying to make your payment. Utakuwa umechelewa. If the settlement date is on 14th August, plan to remit your payment earlier. In fact, on the day that results are announced, once that alphanumeric number code has been sent to your email, or once you cite it in your CSD account, go ahead and do your transaction. Don't always wait for the last minute. So it's important to know, take note of the settlement dates. If you have any doubts that by the time the settlement date is due, you'll not have had the finances in your account, I'd rather you just don't put your bid. Because placing a bid and not settling puts you at risk of being restricted from trading. CBK could buy you from trading, especially if you do this like 3 times. So before you put a bid, always be very sure, if it's a paper you're interested in, always be very sure that these finances will be in your account. This should be either money in an MMF account which you're liquidating, or money in your bank account, your current account, or a fixed deposit account in your current account. You need to be very, very sure that by the time the settlement date is due, you'll be having the funds in your account ready to remit to CBK. In your bonds journey, have you found yourself in a situation where you placed a bid for a bond, but for one reason or another, you were not able to settle? You could not remit your payment to CBK. Did it make you panic? I would like to hear your comment in the comment section. Please leave me a comment. We'd like to know your experience, yeah? Now, another thing that you need to be looking out for when you're investing in treasury bonds is the coupon payment dates. When will you be receiving your coupons? Does it align to your objective? If, for instance, you want to use treasury bonds to pay your rent, that means that you need to be getting coupons every month. We have an IFB which has been auctioned now in August, and the coupon dates is May and November. We also have the March and September coupons, the second IFB. So now, if you already have coupons that you receive in May and November, and you already have March and September coupons, then you may want to skip buying these papers and wait for the next auction, which will have coupons for the months you are not receiving coupons already, so that by the end of the day, you'll be receiving coupons month on month from January to December, sufficient enough to pay for your rent. That is if you want to use treasury bonds to pay your rent. So it's important to look at the coupon payment months. If you want to use IFBs to pay your school fees, I had told you in my bonds laundering video that you can also match the coupons to your terms. You can have a coupon for April and May, December and January, or August and September. That is when school fees is being paid more often than not. Okay? So it's important to look at the interest rate. At what rate is this bond being auctioned at? If it's a reopened paper. If it's a new paper, that will be determined by the demand of the paper. And CBK will give us a rate, yeah? At what rate will it be taxed at? What's the tax rate? What's the withholding tax rate? Is it 15%? Is it 10%? Or is it free of tax, the IFB? And then you talked about the coupons. Now, we also need to look at the maturity of this paper. The maturity of this paper. When will this paper mature? Is it a long-term paper? Is it a 20-year bond? If it's a 20-year paper, are you okay tying up your money over a duration of 20 years at the prevailing market rates? Or do you think that a few years down the line, you could get a better rate? Or is this money that you'll be wanting to use in the next 5 years, in the next 7 years? If that is so, then you may want to skip that paper, that long-term paper which is on auction, and wait for the next paper, which will most likely be a shorter term paper. Maturity of the papers. You also need to look at the redemption structure of this paper. If you are buying an IFB, most IFBs have redemption structures. Now, if you're buying an IFB and it's a long-term paper, but you'll want to use this money within a shorter, you don't want to tie your money for that duration of time, look at the redemption date. On the redemption date, CBK will more often than not remit to you, pay up to 1 million. For instance, if you're taking a 10-year paper, yeah, and it has a redemption structure of 5 years from now. Redemption structure means that CBK is paying you the dates when CBK will be paying back your principal. So if you invest, say, 3 million in this paper, and it has a redemption structure of 2027, 2029, and then maturity. So we have invested 3 million. In 2027, CBK will pay 50%. They'll always determine the redemption structure, yeah? So if the redemption structure is at 50% is paid in 2027, 30% is paid in 2029, and then the balance is paid on maturity. So the 50% of 3 million, which is 1.5, will be paid out to you in 2027. Will you be okay receiving part of your money in 2027? And the balance on maturity. If you want to be receiving all your payment in 2027, then you may want to invest a little less than the redemption amount or the tag for redemption. In our example of 3 million, I've told you 1.5 will be paid in 2027. So if you want to receive all your cash, your investment in 2027, you can invest 950,000 shillings, because any amount up to 1 million will be paid out in 2027. I'm just giving you examples. I'm not saying that is the standard redemption structure for bonds or IFBs. Apana. I'm giving you examples just for explanation purposes, right? Another thing that you need to look out for when you're making a decision to buy a bond is your objectives. What's your investment objectives? What do you want to achieve by investing in bonds? Do you want wealth accumulation? Are you looking for high returns? Do you want to pay your rents? Do you want to use bonds to pay your rent? Do you want to use bonds to acquire properties? Do you want to use bonds Do you want to accumulate wealth in bonds for your child's education, future education? What is your objective when investing in bonds? So these are but some of the things that you need to be looking out for whenever you're making a decision to invest in the bonds, the IFB or the Treasury bonds. Remember, if you are not keen in investing, you might find yourself in a situation where you are bonds rich, but cash poor. Remember, Treasury bonds are classified as fixed assets because they are meant to run for the maturity of that paper. However, it is possible to liquidate your bonds. It is possible to liquidate your papers, to offload them. You can sell them in the secondary market, or you can go back to CBK and have them rediscounted. If you go back to CBK and have them rediscounted, then CBK will penalize you at 3% above the market yield. So it's critical that when you're making a decision to invest in the government bonds, in the treasury bonds or the infrastructure bonds, you need to be fully aware of the salient features of this bond. You need to think through your investment and make sure that you're making the best investment decision. Like I have said, they are not highly liquid. So do not keep your short-term investments in the bonds. Do not keep your emergency funds in the bonds. Do not use the money, your sinking funds in the bonds. You need to understand that these are long-term investments, largely for wealth accumulation and wealth preservation. Now that you're fully aware of what you need to be looking out for when you're making a decision to invest in a treasury bond or an infrastructure bond, could you please share with me in the comment section what your experience in investment in bonds have been like? Whether you have started your journey or whether you have any reservations. I'll not be surprised if I get the comments of, I'd rather put this money in business and make triple this amount. I'd rather buy a plot which I can sell 3 years later and make triple this amount. Yes, that is your objective, but it is not everyone's objective. People have different risk appetite levels. Press the subscribe button and see you in the next video.